Are you a veteran or an active duty service member interested in lowering your monthly mortgage payments without the complexity of a full refinance? Well, there's a specialized VA loan program that allows you to potentially save thousands of dollars without requiring income documentation, extensive credit checks, or even an appraisal. Now, in today's video, we'll discuss everything you need to know about the VA IRRRL. I think we've all potentially heard it. If you haven't, that's the interest rate reduction refinance loan, commonly referred to as the VA Streamline Refinance. Stay tuned, as this could be a valuable opportunity for many VA loan holders. What's up, guys? I'm McKeown, and welcome to the Veteran Advantage channel. I'm a proud U.S. Marine Corps veteran, and I had the honor of serving from 2008 to 2012 out of Camp Pendleton, California. Now, whether or not you're still on active duty, getting ready to transition into civilian life, or just curious about the benefits available after serving in the military, this channel's got you covered. So go ahead and hit that like button and subscribe to the channel, and stay tuned for more future content. So first, let's go ahead and define what a VA IRRRL is. Now, the VA IRRRL is a refinancing program designed specifically for veterans and active duty service members who currently have a VA loan used. Now, the purpose of this program is to allow eligible borrowers to refinance their existing VA loan, often at a much lower interest rate with minimal documentation. Now, this process is intended to be straightforward and efficient, hence the nickname VA Streamline Refinance. But you may be asking, who qualifies for a VA IRRRL? Well, to be eligible, you must already obviously have an existing VA loan. And the program is primarily intended for those looking to reduce their mortgage interest rate or transition from an adjustable rate mortgage to a fixed rate mortgage. Typically, the property being refinanced must have been your primary residence at some point, and in many cases, the home is still the borrower's primary residence, as VA loans generally require the property to be owner occupied. Now, an example I actually have experienced myself, I occupied a duplex as a primary residence. I moved out of that shortly after, maybe 6 months after that, moved into a single family home, used a conventional loan on there, and lived there for about 2 years. After I lived there for 2 years with a conventional loan, primary occupant, second home, I then moved to a third property and utilized my VA loan for the second time, still having it on that duplex that I purchased about 2.5 years prior, which was my first purchase. I then used my VA loan for a second time, and I was actually able to move out of that property about a year or a year and a half after I moved into that third property. So now I'm in my fourth property, and I have 2 VA loans out. Now, they were at pretty good interest rates, but if you're familiar with what happened in 2019, 2020, 2021, rates plunged. So one thing is for certain, if you were in the real estate market, if you owned a home, if you had a VA loan at the time, you likely were contacted to potentially look at whether or not a VA IRRRL made sense. And for those 2 properties that I purchased, I was able to refinance or use the VA IRRRL on both of those properties, even though I wasn't even living in them anymore. But because I used a VA loan and occupied the property at the time, down the road, I was able to just utilize my VA IRRRL, again, even not having lived there anymore, and reduce the interest rate on those 2 what are now investment properties and cash flow even better. Now, obviously, those 2 properties turned into investment properties. They weren't at the time when I occupied them, but the flexibility that the VA IRRRL has, meaning that it technically was a primary property when I purchased both of those properties and utilized my VA loan. They are no longer my primary residence, but I'm still able to refinance them utilizing the VA IRRRL as if I'm still a primary occupant, still get an incredible rate. Like, for instance, I'll give you an example. If you were to go out and buy an investment property right now versus if you utilized a VA loan or just refinanced your VA loan, currently speaking, you'd likely be looking at a rate almost 1% higher if it was an investment property. So by being able to utilize the VA IRRRL, even though you're not even technically living in it, or maybe you still are living in it, you still get that great primary occupancy rate that you would get with a refinance with a VA loan, or just a simple purchase with a VA loan. The rate is going to be the best on the market. Now, just to give you guys some clarity here, I'm gonna give you an example that won't make a ton of sense in terms of reality, but just work with me here, okay? Let's say I bought a house today, and I wanted to use it as a primary occupant home, I would get maybe a 6% conventional rate, ballpark. Now, let's say for all hypothetical purposes, tomorrow I decided to move out, put a tenant in, turn it into an investment property, and look to refinance maybe tomorrow, next week, or next month. Obviously, rates are gonna adjust over time, but I'm not gonna be sitting at that 6% interest rate. I'd be refinancing it somewhere closer to 7%, because oftentimes the difference between a primary occupant rate versus an investment rate is close to, if not larger than, a full percentage. So the fact that you don't even necessarily have to be living there anymore, but you almost get a whole percentage better utilizing your VA IRRRL, again, not even technically living there anymore, but you get that premium occupant rate, means that the opportunity here is incredible. But obviously, if you bought in 2020, 2021, maybe 2022, you're probably never gonna utilize the VA IRRRL because your rate is so incredibly low. But if rates do start to fall down here in 2025, a lot of those people that purchased in 2024 and maybe even in 2023 could be utilizing this Streamline refinance here before you even know it. Now, the benefits of the VA IRRRL are significant, guys. The primary benefit is the potential for reduced monthly mortgage payments due to a lower interest rate. Now, additionally, the streamlined nature of the program means that many traditional requirements such as income verification, detailed credit checks, and appraisals are often waived. And this obviously simplifies your refinancing process and can save borrowers time and effort. Now, another advantage is the reduced funding fee. Now, while most VA loans require a funding fee, the fee for a VA IRRRL is typically only 0.5% of the loan amount. Borrowers with a disability rating, though, of 10% or more are exempt, just like they are when you purchase utilizing a VA loan. Now, furthermore, this fee, along with other closing costs, can often be rolled into the loan, minimizing out-of-pocket expenses. However, there are important considerations to keep in mind. The VA IRRRL program requires a net tangible benefit for the borrower. This means that the refinance must result in a tangible financial advantage, such as maybe a lower monthly payment or a more stable fixed-rate loan. Additionally, the cost of the refinance includes fees and expenses and must be recouped within 36 months through the savings achieved by the lower payment. Now, this safeguard ensures that borrowers do not enter into refinances that just don't make financial sense or just any financial benefit in the long run. Now, the process for obtaining a VA IRRRL is relatively straightforward. Borrowers begin by contacting a lender experienced in VA loans, and after completing a loan application, the lender will evaluate the borrower's eligibility and provide guidance throughout the entire process. Now, while minimal documentation is typically required, it is important to work with a knowledgeable lender who can help assess whether your refinance aligns with your financial goals. It is also crucial to shop around and compare lenders. Some lenders may advertise competitive rates but charge higher fees, so obtaining multiple quotes ensures that you receive the best possible terms. And avoid those that may overcharge or include unnecessary costs. Now, when considering a VA IRRRL, it's important to be aware of potential drawbacks. One such drawback is a possibility of extending the loan term. For example, if you have been paying your mortgage for a few years and then you refinance into a new 30-year loan, you essentially reset the clock on your repayment schedule. Now, while your monthly payments may decrease, the total interest paid over the life of the loan could certainly increase. Understanding these implications is critical to making an informed decision. Another consideration is the funding fee and how it affects your loan balance. Rolling this fee into the loan increases the principal, which may slightly offset the savings achieved through lower monthly payments. Now, borrowers should carefully evaluate the long-term financial impact before proceeding. Now, it's also worth noting that the VA IRRRL is distinct from other VA refinance options, such as the cash-out refinances. If your goal is to access equity from your home, that would require a completely different type of loan with additional requirements such as income verification and an appraisal. No, you cannot do a VA IRRRL cash out refi. It does not exist, guys. So for veterans who do not yet have a VA loan but are interested in learning more about VA loan benefits and guidelines, additional resources are available to help you navigate the process. Now, the VA IRRRL is a valuable refinancing tool for veterans and active duty service members looking to lower their monthly mortgage payments or transition to a fixed rate loan. With minimal documentation requirements, reduced fees, and a streamlined process, it offers significant advantages. However, it is important to fully understand the loan's terms, potential costs, and long-term implications to determine whether or not this option aligns with your financial goals. Now, early in this video, I mentioned two different examples on a duplex and a quad, both properties that I occupied since then, had moved out, and decided to use a beautiful VA IRRRL. It saved me a ton of money on those two particular properties. I've actually since sold those properties and upgraded to larger investment properties. But yes, the VA IRRRL is a great opportunity if it makes sense for you. Yes, you've obviously got to run the numbers for yourself and don't just rely on one particular lender that may be pushing you into just refinancing sold for their financial gain. Make sure you talk to a couple lenders, make sure you talk to a couple maybe veteran buddies of yours, or just leave a comment in the comment section down below. Reach out to me on Instagram or any other social platform. Schedule a Zoom call with me. I love being able to help fellow veterans. I just love being able to give back. And if there's any way I can help, trust me, it's something that I love to do. All of my information is going to be pinned in a comment down below. Again, you can really reach out to me via text, email, Zoom, or on really any social platforms. If you do have any questions about the VA IRRRL or just purchasing, utilizing your VA loan, or really anything when it comes to veterans, or really anything when it comes to just utilizing the benefits that us veterans get, leave a comment down below and I'll get back to just about every single comment. As always, I appreciate all the support. Make sure to like and subscribe. It really does help, and stay tuned for the next video.